few of them. I was out in California. We stopped first in Los Angeles, and we played a couple of courses. This is one of them. I'm going to show you the picture here. This is called Oak Quarry. That's like from the first one of the tee boxes on Oak Quarry. I mean, it's out of this world beautiful. That's in like LA or just outside of LA. And then played a couple other courses in the area. And then went down to San Diego, played Torrey Pines South, which was absolutely amazing. So really enjoyed my time. Thank you all for uh, um, skipping that session that last week. Not like you had a choice, right? So excited to be here. A lot that we're going to discuss here today. So let's get on into it here. Before I begin, got to let you know I'm not acting in my capacity as a commodity trading advisor. Simply here showing you opportunity, what you do with that opportunity. Let's see. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, and take on that risk and be willing to accept that risk. And lastly, any trades I show here today, if you decide to take them, just know that you're doing so of and on your own volition. Let me see 1 second here. Anybody first time here? Anybody's first time here? Type in a yes if it is. If it is. All right, beautiful. For those of you guys in here that don't know me, my name is James Bishop. I've been in trading and trading education for 17 plus years. I co-founded a managed fund. Last year, we finished the year right around 30 something, 34 or 32%, I think it was. Year before was like 37. Year before that was 40%. And we do individually managed accounts. I also do own a retirement and estate planning company. And these are the three pillars of finance that I think that everybody must master if they want to, one, retire and stay, one, retire, two, stay retired, three, combat inflation, and four, help build wealth. Those are these three pillars: the trading, the having money that's managed for you in an aggressive way that gets you aggressive returns without major losses. I'll tell you this: it's been 14 years and we haven't had a negative year. And then lastly, having money that you can never lose, right? Let's see. So like asset you trade. Okay. Sorry about that. Let's see. Jerry, I know it's right around the corner for you. I also have my MBA in global portfolio management, and I'm working on my doctorate in finance and economics. Getting started back up with that in late March, early April. Took a little bit of a break to catch up on things that are just overwhelming me over the last few months, but we got through the coursework, and now it'll be on to the dissertation phase of things. Couple of housekeeping things. The Wealth Watch, for those of you guys that don't know, even while I was out, I host a let me copy this here. I have a newsletter. It's cost you $0.00. So everybody in here can afford it. Costs you $0.00. And what it comes out every single day. I do reviews on the stocks as well as reviews on stocks as well as analysis and concerns on different things. I bring in news. I talk about what's to come, why certain things are moving the way they are moving. You get a free ebook as well. Go ahead if you want to, please do go ahead and subscribe to this. That is the newsletter for those of you in here. And I think I just sent that to myself. I sent out the link and realized, oh, I just sent it to me. Zoom should really just default to everyone. And then if you only want to chat to the host, then you can do that too. But Um, there's the newsletter. If you want to go ahead and please subscribe. That way you're constantly getting that. Even while I was gone on vacation, I literally set up in my I set up in my hotel room with my laptop at 3 and 4 o'clock in the morning. One day it was 2:54 a.m. and I recorded these videos so that way they would go out on time prior to market open for East Coast time, right? So I was getting up at 3, 4 in the morning just to make sure that I got you guys these videos. So subscribe if you can. And then the next thing that I'd like to talk about is our Discord channel. Right. It is a growing channel to say the least. We have what? 62 of us online and about 376 of us offline. So about 400 and something change. I want to get that up to around 500 or so. I'm going to send you guys the link right now. This is the link to join our Discord channel. We have great things here, right, on Discord. We have a lot of great things. We have, individuals that will share, what options they're trading and how they're trading. They are sharing their trades like Freddie and Stewart and different news outlets. I love this one that Freddie just found, right? Proposed rule changing to, therefore is extending this 45-day time period. So they're looking at voting. The next voting date is going to be April the 14th, which would change the pattern day trader rule. Okay, would change the pattern day trader rule to $2,000 is all you need to minimum in your account. All right. So let's see. Who am I supporting in the Super Bowl? Priyanka, I can tell you, and I'm going to shock some people here. I've not watched a Super Bowl in probably 18 years. Alfred, good to see you, buddy. My what's really bad, Priyanka, is I have like 10 friends and clients that are in the NFL. I've gone to preseason games, right? I've gone to preseason games. I could go to everywhere, right? Yeah, I have NFL clients. I have professional golfers that are clients, NBA players that are clients. I'm not a person that like brags or anything like that. Like you'll never hear their names. I won't use them in ads or anything like that, but they're very close friends of mine too. Like I play golf with several of them. A couple of them are down here because they're not in the Super Bowl this year, and I played golf with them the day I got back. So, and it's a definitely I've been blessed and privileged to be where I am, coming from where I came from. Because I'll tell you, it was just me and my mom, and she made $20,000 a year. It wasn't a lot in the 90s, and it ain't a lot now. I'll tell you that right now. So you can imagine the two different lifestyles I have lived in my life on both sides of the train tracks, as they call it. So, um, and I'll tell you, like, the other thing is my brother is football obsessed, right? My brother played football for West Point. I used to go up there as well. So, to West Point to see his games. And then he became a coach, and I went and see him coach and stuff like that. And I'll always support family and friends, but uh, and I'll tell you why football fell out of favor with me is because I read an article once that was done by Harvard and Brown and redone by several other companies. And they found that in a 4.5 hour football game, there is only 11 minutes of action. You are wasting 4 hours to watch 11 minutes of actual playing time. And after that, I said, okay, I'm done. Right. After that, I said, I'm done. Right. That was it. That was it. So for me. So that's the two housekeeping items there, Discord and Wealth Watch. So join that Discord. Right. Oh, Jerry, I know. Well, I mean, nobody had a problem a few years ago when it was Shakira, right? So, absolutely. So, look, now let's jump into the news. So, we have this week's Stewart. My brother played and coached for West Point for the last technically 5 years. He was there as a prep school, and then he went on to obviously the main academy and was there for 4 more years. So NCAA is through and through. Wes, that's hilarious. So look, guys, this is this week's fundamental news announcements. If you want to, go ahead and take a screenshot of this and type in "done" when you got it done. Ron, it was amazing. It's so crazy. Like I changed the boy's diapers, and now he's graduated college. It made me feel 40, to say the least. So, um, let's see. Type in "done" when you got this screenshotted, right? We have Fed Governor Waller speaking, retail sales. We have Fed Press Bostic, non-farm payroll. That was delayed. That was the January one that was delayed. It was supposed to be the first week of January. It got delayed because of the storm or whatever. It's kind of be coming out soon. Unemployment rate coming out on the 11th. Monthly budget, we'll see. Initial jobless claims, existing home sales. Out of these announcements, I'll tell you my big ones. This initial, existing, and CPI and core CPI. That's the pretty much that's pretty much the most important ones. And then I'll also look at retail sales as well. So those are my main ones, right? CPI, measure of inflation, that's going to be important. That'll give us insight on what the Fed is going to do. And, jobs are obviously very important. We'll see what, unemployment rate looks like and things like that after this month. Earnings this week. This is the page one. We got 2 pages again this week because it's a big one. We have Lowe's, Principal Financial, Coca-Cola, Gilead, McDonald's, Kraft, Shopify. All of these companies are reporting. Go ahead and screenshot that and type in "done" when you are done with this one. Government shutdown will happen Friday. Sharon, it was potentially it was delayed until Monday. We'll see if we get the government shutdown again. We don't know. Hopefully not. Hopefully it's not, happens again. But let's be honest. The right doesn't like the left because they're left, and the left doesn't like the right because the right and no one likes each other because they're all old curmudgeons, I hate to say it that way, but sometimes it just feels like they're arguing so far apart that they're saying the same things a little bit. But hopefully we get past this and we don't have another government shutdown and families can stay getting paid and with benefits and things like that. And what's so funny is in here in this very room, someone called me a effing idiot or something like that because I suggested why not just fund this thing for the next 6 months. It was over the last one was over Affordable Care Act. Why not just fund it for the next 6 months and then come up with a better plan and then replace it? That's what I suggested. I got called an effing idiot. What'd they do? They funded it for the rest of the year. How about that? How about them apples? Then we'll go page 2 here of the earnings report, which is we have Cisco, Twilio, Marriott, DoorDash, Arista Networks, DraftKings, Airbnb. I put on here for specifically, I kind of am interested to see where Airbnb's, how their earnings are doing. I am going to suspect, that we're going to see Marriott and Marriott and Airbnb probably miss earnings. And that's going to be the first little kind of crack to show that, hey, while spending is up, spending on extraneous items, things that you don't really need, right? The superlatives and the extras in life, the vacations and stuff may not be as much as we think, may not be as much as we think. So that is one of those things that I would bring to your attention. And then, going into a little bit of news, we saw AI driving investor anxiety, but analysts note little fundamental evidence of earnings deterioration. Investors hit with over 400 billion of losses last week over AI fears. Look, guys, here's something I am very passionate about. It's so passionate. It's why I have the company that I do and why I do what I do every single day. There are investment opportunities out there in this world that you don't have to have. Your minimum is like $10,000 or $20,000 on some of these, and one, they give you a 30 to 50% bonus for just opening the account. Two, you can never lose the money that you invest into this account. Three, it grows at somewhere between 6 and 12% per year. And it can be more if we are more aggressive in how we plan and move money around, which I am. So I can help you with that. And there's opportunities around it where these 400 billion of losses don't ever have to be you. Imagine you guys never being invested in something and never losing a penny. How many of you would be interested in something like that? Type in a yes. If you had the ability to invest and never lose a penny, if you knew that you could never lose a penny, because that's what I do. It's what I do. It's what I do on a daily basis. Okay. I can help people. I can help generally anybody in any situation, right? I'm going to send you guys a link here. Give me a second. Go over here. Just click off of that for a second. And I'm going to send you guys a link to book time on my calendar. There it is. Book time. Right now, I will tell you that I haven't updated my calendar. If you want to use it later, great. If not, if I have a webinar or a previous engagement during a time, I'll just give you a call and we'll move your appointment. But book whenever you would like. Okay, I want you to book because I think it's important that you just learn the information is the most important thing, right? You know the information, you have the information, and then you can make a decision on the information from there. This is no pressure. I'm not here to push you down in any road. I'm just going to show you the opportunity, and what you do with the opportunity, that's up to you, right? That's up to you. So, let's see. We have Bitcoin faces thin liquidity, shrinking market depth. We're going to talk a little bit about that. Retail traders add 430 million into silver despite monumental sell-off volatility. And then we have Japan. LDP and coalition partners set to win 2/3 of supermajority in Japan election. Japan stocks set to extend rally. Yen and bonds likely to see further declines after strong LDP performance. So that could mean, some very big changes in Japan and a continuation of the unwinding of the Japanese carry trade. Now, what's the Japanese carry trade? Well, I'm glad you asked. I got a slide for you on this Japanese carry trade right here. This is what people were doing, okay? And this is what, a lot of people were doing. A lot of big banks and stuff were doing. What they would do, right, when Japan had 0% interest, yes, 0% interest or even negative percent interest, they could borrow money in yen, convert the yen to US dollars, invest that yen into stocks, right? So then the investment returns will be higher than your cost of borrowing. So imagine if you borrowed at 0.1% and you made 12%. And you did that without you tapping into your own money. Oh, you guys, can you see the slide? Yes or no? You see the slide? Okay, good. So Ravindra, you may just need to click on a different tab. You're not looking at it. Okay. Good. I just wanted to make sure because Ravindra just said he couldn't see the slide. So that's the yen carry trade. Now, how does it unwind? Well, when the yen gets weaker and they have positive interest rates, it's no longer the cheapness that you borrowed. Now, if they have interest rates at 3% and you're only making 6% return, that 3% isn't going to cover what you needed to cover. So people will pay back all of that money. And now Japan has an excess glut of cash. And we have a falling stock market because they were invested in the stock market. So they now need to sell their shares and unwind that cost. Does that make sense? Yes or no? Do you guys follow that? Good. Good. And that's why it's very important to be paying attention to what's happening in Japan right now, as well as what's happening everywhere, right? So the other thing that we're going to talk a little bit about here today is we are going to get into some of these AI stocks, okay? And I'm going to get into that in just a little bit, but when we're going to go through this slide. But before I do, we got a couple of Sunday session stocks that I want to bring up. A couple of which I think are, one of which I think is recently, is I want you guys to look at potentially closing, which is Zoom, right? Zoom is sitting at $92.20. We're going to go over to that stock really quickly. Just bring it up really quick. ZM. And we're up about $19 a share on Zoom. I don't know what's going on here today. Let me reload. When in doubt, refresh it out, right? Anybody else having trading view issues or no? You know what? Close the tab. Nope. Okay, good. Good. It's just me. Just what I was hoping for. All right. Just what I was hoping for. It's just me. Oh, no. What the hell? Not a robot. Maybe it was because I was in California and now I'm in Florida. And I'm like, what are you doing? Because I got gig speed up, gig speed down over here. So let's try this again. ZM. That's what we're gonna look at. Priyanka, type that to me in just a little bit. Okay. Type that to me in just a little bit. So I don't miss it again. So in looking at Zoom, yes, do I think the profit target of 105 is still there? Yes, I do. I just think that, hey, sell part of this position, let the other part run. I think that Zoom it is starting to show a better uptrend than just this long-term consolidation. We do have earnings coming up on Zoom as well. So if you want to hold for earnings, feel free. I don't know why it's not popping up. There we go. Earnings is February 25th. So feel free to hold till then. But it is still consolidating. It is still moving sideways. This is a slow burn. If you guys want to free up some capital, there's one that you can free up right there. Other stocks that we are definitely going to talk about: Lulu, United Healthcare, Amazon, PPTA. We talked about Zoom. I'm clearing that off the board. And we talked NTLA, MSTY, ABTC. We'll still look at that. And then we got a few others that people want to look at as well. Let's see. Let's go ASTS, Robinhood. Tesla, we got UNH, AVGO, AMD, SLV, GC, BE, APLD, Google, GILD, Gilead. What else do we need? CAD, Swiss, pound, yen. It should be enough. We may be able to fit a couple more. Rick, it might be, but it'll be a little bit of time before I get it up. and posted. Or are you asking, is this a recording? And NVIDIA. All right, cool. NVDA. So let's start really quickly with Lululemon. All right. And actually, yeah, we'll start Lulu. LULU. So here is Lululemon. As you see, guys, it is back down into that 172, 185 range. We talked about this. Our first initial buy on this was at 166.24. If you're still in it, like I closed half my position at like 220, and then I rebought in at around 180. I think Lululemon is still going to be rally. I think there's still going to be a great opportunity. I think it's not going anywhere. This is just a buy and hold. If you haven't bought it, now is the time to potentially look to buy it. You can use options. You can trade it however you want to trade it. If we look at Fibonacci swings here, and we look at that there to there, to there, and that's we'll just go from our low to this recent high. So we're down into that kind of a 8.6 pullback. So we know we're going to go to the 1.18 or right around 237.90 is the next predicted high on this. Again, I'm still looking for this to fill this gap up to 329. I have no problem in this. I think that the Amex sales have been producing and people are seeing it. Yes, they got hit by unfortunate a little bit of news around Lululemon's with the apparel and all of that, and we'll see if but they have a great online presence, a great partnership with Amazon and all these other companies, and there's more to it than than just the Amex story, but I do anticipate Lululemon to continue to rally there. We can take a look next at UNH. So let's go United Healthcare. What is going on today? I don't know what's going on, why it's taking so long. And I still got Lululemon stuff on my screen. Close that. This is really weird. Super Bowl ad. It might be Super Bowl streaming stuff. I didn't even think about that. When is kickoff? Is it already started? Already started? Oh, it's okay. So yeah, it could be something with that. Taking bandwidth and stuff away. Isn't it crazy how just football can do that? That's Google. Come on. Yeah, even FactSet doesn't want to work. Let me try another charting software. All right, there we go. There's UNH. May just take a little more time to load today. So United Healthcare, look, I talked about this last week. I talked about this in a video. I said that it could fall right into this gap. And guess what? It fell right into this gap. We had better than expected earnings per share, I should say, better than expected earnings per share, lower revenue, which that's, the leftoverness of the fines and things like that. I fully anticipate this now that this gap is filled. It is a clear runway back to 349. So if anybody is looking at this and debating this, I would think now is a great buying opportunity for this. You can wait, obviously, until you have a blue dot if you wanted to. Okay. Obviously on the way to, you can wait to get a blue dot as well. Deborah, you may be able to zoom in on the window that I have up. Okay. Just so you know, because this is as big as they go for this, because it's a 4K monitor, is what I have here, or maybe it's 5K. I don't know. It's something. It was really nice and it looked really good, so that's why I bought it. No clue what the tech is behind it, I'll be honest with you guys. But this is looking to go from 276 up to easily 346, and then long term, again, our long term target, as you all know, 583. Right in there is where we're looking to go. Let's get into Amazon, AMZN. Man, I should have done this off my hotspot tonight. All right, Amazon took a pummeling last week after their earnings per share was a miss. But here's the crazy thing that I think is more important than that small little earnings per share miss is they showed a 24% increase in purchasing of Amazon Web Server, right? Amazon Web Server, 24% increase in that. But yet the stock tanked. You know what? I think that was a little due. And I think we still have a little room to the south. 194 is kind of my price target low on this. 194 is there, and that is where I would do some buying. Here's a great opportunity for you as well, right? Amazon, you can also buy one of these leverage ETF shares, AMZU. It's a 2x bullish share, and it's a lot cheaper than buying the stock outright. And it'll load up, I promise. Exactly, Ron. Right to the gap. I mean, literally, that's where it's heading. I think it's going to finish up at the bottom of that gap right at 194.33. Right. AMZU right now, $28.32. And it pays a pretty good dividend, if I remember correctly. So this should look to, again, rebound. Right. You can wait for your blue dot to buy this, but wait for that rebound as well. Dividend on this is 25 cents per share that you have. So not a bad dividend on AMZU. Okay. So that's just a little pro tip for you and where you could potentially look to buy this. I think $28 is an easy decision to pick up a few shares of AMZU, with the understanding that if it falls to 24, it'll be okay. Okay. Now, the next one that we're going to go over, let's look at NVIDIA. Did anybody in here that subscribed to Wealth Watch, did you guys get my long form NVIDIA video? Yes or no? Long form NVIDIA. It was like 17 minutes long, and I went through the upside and the downside of it. Well, for those of you in here that didn't, right, I'm not telling you to just sell completely out of NVIDIA. I'm just offering you insight onto the ability to exercise caution around NVIDIA. Right, BK, Bella, it does not. Like, feel like I'm on 56K dial up over here. You know, I'm about to get the donkey sound that the internet used to make. But we will hopefully get through this. Nvidia, right? We had this major downside, this potential from a fundamental standpoint and a technical standpoint on a downside swing. Partly from the fundamental side, what's driving it is circular financing. How many of you in here do not know what individuals mean by circular financing? Type in a wire yes if you do not know what that means. It's okay if you don't. Okay. It is absolutely okay if you don't. Okay, good. So there's several individuals in here that don't know. We're going to refresh that again, and we're going to hopefully get NVIDIA to load up here. It's so crazy. It was working like right, 6:30. Fine. No issue. But while I bring that up, this is a great infographic that I built on what you would call circular financing. So we're going to start here. I'm going to put this little pink thing. You can't really see that. I'm going to point an arrow. We're going to start right here. Okay. This is our starting point. You got NVIDIA, Microsoft, Google. Okay. What they are doing is they are spending their money and investing billions and billions of dollars. In the case of Amazon, they said 200 billion. In the case of Google, 138 billion. In the case of Microsoft, like another 100 plus billion. In Nvidia, $500 billion over X number of years, right? They're investing billions into these AI startups, Anthropic and OpenAI and Gemini and all, and what's the other models? Perplexity and all these AIs, right? And these AI startups, well, when they start up, they need to go spend money on buying chips and cloud services, which who sells the chips and cloud services is NVIDIA, Microsoft, Google, and back and forth. As a matter of fact, Google manufactures their own chips that only run on their own cloud. So it's like a big circle. And here's where it gets kind of questionable. Okay. I'll give you a real recent example. NVIDIA spent 10 billion, right? They spent $10 billion with OpenAI. OpenAI spent $10 billion on NVIDIA chips. So, did anybody spend anything? And did anybody make anything? There's an old saying that like $20 can get rid of like if I borrow $20 from you and someone else borrows $20 from me and someone else borrows $20 from them and on and on and on, $20 paid back, nobody's out anything and the whole world's out of debt. But think about this. This is what is kind of scary. And this is where the effect is on this. Okay. Is that what we just saw with the 10 billion that NVIDIA spent and the 10 billion that OpenAI spent to NVIDIA, that counts as $20 billion of production and consumption when it comes to our GDP numbers. So it could look like things are more propped up than they are. Does that make sense to everybody? Yes or no? Does that make sense to everybody? Yes or no? Now, here's where the big fear is for me, is that if something, whatever it may be, just goes away, right? Who knows what it could be? Man, we are not getting charts loading here today. I'm going to sign out again and close the tab. trying a different tab here. Hold on. Yeah, it just seems to be a quick issue with the Super Bowl and streaming and AT&T. Everybody's short AT&T. Oh no, I don't want to sign in with that. I want to sign in with email. We'll see. Maybe this will work. I'm gonna check my router settings right now on my phone. Oh, what's going on here? That loaded fairly quickly. That loaded super fast. Let's see. I forget to pay the bill. No, that's on auto pay. And what's crazy, it shows I have 1,331 megabits download speed and 998 megabits upload speed. So I don't know. The only thing it could be is cache. Hmm. It's the only thing I think it could be. We'll do that real quick. We're going to delete the cache. If we have to stay a little bit extra to get through the last bit of stocks, I definitely will. Don't worry about it. But we'll do what we can here to try to get this rolling. Um yeah, Rick, I don't think so. Who knows though, these days. I mean, I have a thing, everything's optimized. Wow. That's crazy that my internet Wi-Fi here is so slow. What is going on? And on my phone, yeah, it's like from my Wi-Fi router to my house is what's going. Or from the Wi-Fi router to the computer is what's causing an issue here. So weird. What the hell? What are these dots? I don't know what those dots are. Let's try now. NVDA. Hmm. Yeah, I would have to restart the router, but that means I would have to end the session here. Let me just try one other thing. Stay on with me. It's gonna briefly disconnect me. And then it will reconnect me. I'm just gonna use my Wi-Fi, okay? Let's see. I'm gonna use my phone as a kind of a hotspot. So just stay with me. Do not leave. All right. Don't leave. I'm gonna switch to my phone. Now, what is this? All right. Can you all hear me? FT, yes, you are correct, but Cisco was one of the few. Now, I'm going to read what he just said. Okay, perfect. FT just said, as long as some recipients of financing of AI chips like CoreWeave, Meta, Oracle apply fast speed to market AI models to generate revenue, like Apple investing slash allowing in Google Gemini into Apple environment, circular investing and financing seems okay. Cisco used similar method in the 90s. That was the thing, everybody used a similar method in the 90s, and that created the dot-com bubble. That's part of why the dot-com bubble existed. Now, I don't know what the hell that is on this chart right there. Maybe I did get hacked because I have never seen that ever on my charts. I guess somehow ideas was on there. Okay. So hotspot works. So we'll just roll with that. So for a little bit. But as you see, right, as I talked about, we have a left tip, center tip, right tip scenario. We have failed to make a new high above 200 bucks. Like, 200 is kind of that last real high that and we've come up close. But if we don't break 200 bucks, I look at this as a potential breakdown in the stock. I think that all it's going to take is one miss earnings or one small miss will cause this thing to come cratering down. As look, there's protection that'll be needed. There are gaps down here to 118 and 142. I've shown you and proven to you, haven't I, Priyanka, that gaps do exist and they do follow rules. 158.34 is the first Fibonacci D extension that this could go for. And then 132.95 as a follow up D extension from there projected as well. So if we anticipate this could look to push down. Is it going to happen tomorrow? I doubt it. Is it going to happen next week? I don't know. All it's going to take is one small thing that will, the slightest headwind, and there will be a big fall in this share price, and we will see it fall down into this area. Okay. Let's see. And then if we go here to oh my gosh. How is the access denied if I'm the owner of the damn thing? Oh, because I'm signed out somehow. Um, Today's Sunday session brought to you by Jacked Up Internet. Um, and then it signed me out of TradingView. Folks, I'm not going to lose it. I promise you, I'm not going to lose it. All right. There we go. So, in looking at this again, looking for this potential fall down to here, as we talked about. Let's go through a few of these as well. Let's go NTLA. NTLA, this is a stock that, we talked about, bought in at around $8 and some change. It shot up to just over $17, and then it has pulled back as I anticipated that it would. I think now is this is a great time to potentially get some shares if you weren't in it already. This surge up, we had a pullback right here into this red zone. So 22-23 is the next kind of extension we're looking for. The gap on this that this is looking to fill is 25.08. Is as high as that gap is, where that next gap is 25.08. From where we are, that's a little more than double where we are right now. And from $8, it's a great one. But this drug that has been in phase 2 clinical trials, that had a couple of individuals passed away, but they resumed their phase 3 clinical trials. And now, this is where it was in the 180s, as it ramped up and entered in phase 1 and phase 2. Phase 3 got paused, and you can see what happened. And this, look, if we get back into $45, $60 territory, this is a great return. All right, let's check out SLV for silver. SLV, as you know, let me see here. We have, look, it pulled back greatly, right? We were sitting at 112, 110. Smashed itself all the way down, and it is still looking to fall a little bit, right? Selling energy is leaving, but not enough buying energy is in there yet. If we go in and we look at silver futures, because that market is open, we are sitting up about 79.45. If we look at today's movement, I'll go 1 hour chart here. You can see we got a blue dot buy right at the end of Friday, coming in here to Sunday. We are looking at this rally going up, and it's a slow climb, right? Remember, bulls climb stairs and bears fall out of windows, as I said, and that is so true. You have to protect yourself with stop losses. You cannot let this stuff happen to you, right? Because the recovery can take forever. Right, Jerry, I love it. Right, you caught that. But I do anticipate silver getting back to 81,870, and continuing to rally back up from where it is. Do I think we're headed to 110, 120? No, I think we're gonna bounce between like 92 and 82 for a little bit, and then probably another jump up into the hundreds. And yes, I do think silver and metals are still a great opportunity. They offer a great protection. However, we know, hey, there was some market manipulation. There were different things happening in the markets that created an environment that created this fall. Right. And a lot of profit taking. We had an 8.6 pullback here. So 52.02 is where I look at gold futures to rally back up to 52.02. Again, we saw Friday that put in that buy. We got into the buy zone right here at 4.884, and it's still rallying up from there. And if we look at today, here is our buying opportunity Sunday to now, and this is just where we are. We are seeing a little bit of selling pressure coming in and selling energy coming in. However, we still are in the buy zone, so I anticipate that to continue to take off. Bitcoin was very interesting because with Bitcoin, on the daily chart, we all looked at this together right before I left. And we plotted the Fibonacci's here, and we said 58,000 was our low. We got the low down to within $2,000 of our range, but we haven't seen it hit that range yet. So if we plot these again, there 58,347 is where our low is on Bitcoin. We're sitting at 70,000. We haven't broken a trend. We're not seeing this trend break. If we break this 9-day, this trend here, the blue line, we probably will head to the red line. If we break above both, be very cautious, right? If you're trading it, just be very, very cautious if you're trading it. Couple others here. Let's go ASTS. ASTS, again, I talked about this pulling back. It did, just be very careful. Again, I do still think it goes to 136, but it's going to need some room to fall. Nothing moves parabolic forever. Nothing moves parabolic forever. Understand and know that. OKLO was another great opportunity. We had a buy here at 62. We're sitting at 71. And again, I'm looking for OKLO. We hit our D extension to the south. At minimum, right? At minimum, I would look for this thing to come back up to 100 from where we are. So I'm looking for a buy on OKLO.25. 71.10 and buy. And then let's go ASTS. We saw Tesla. We'll look at Tesla's one of those stocks that I would just hold if I were you. Like, look, it's just going to be around. It's going to be there. I think Tesla does rally back up into the 470s. From where we are, I don't know immediately, but as they are getting rid of two models in their lineup, the X and the S, which are the full size car and the larger SUV, and they're focusing more on robots and automation and autonomous driving. Right. So my low on Tesla is 378.35. Then after that point, I think we rally up again. So just be cautious if you're entering in Tesla now. Understand that there's a, $30 fall there that could happen. Right. Understand that there's a $30 fall that could happen. Jerry, I love it. I'll be honest with you. I absolutely love it. I have autopilot in my Tesla and I use it all the time. Okay. I do have a Tesla Performance Edition. It's like having 550 horsepower available to you in a second. I only leased it for a year just because I wanted to see what it would be like. They had a 1-year lease special going on for $270. So that's why I did that, but we will see, SPY, again, we're still in the uptrend on the SPY. What's interesting to me is that we've been just very much consolidating. We've been consolidating between these highs and these lows because people are trying to figure out what's really going on with the economy. Where's the next Fed chair? What's going on with that? What's happening with, there's so many little things happening. What's happening with tariffs? What's happening with the EU? Because of all the unknowns, the market can't choose a direction, right? Because of all of the unknowns, the market cannot choose a direction. That's what led to the gold and the silver and the metals spike, is because there's so much unknown that we can't choose a real market direction. We did see a pop in Under Armour, by the way. Got laughed at when I talked about this stock when it was at $4, but look who's laughing now. So Under Armour is sitting at $7.56. As look, people turn to cheaper alternatives. Nike is extremely expensive. There are cheaper alternatives to Nike, which is Under Armour. And even though they offloaded employees, they offloaded celebrities, they don't have big endorsement checks that they're writing, and they're getting back to kind of their core model of what made them successful. So maybe we see Under Armour back into the 10, 20, $30 mark. We will see. Right? We will see if we see that. Not sure. Again, this is just a first time major second time earnings pop, right? We had better than expected earnings back in November, and then Q4's earnings were really good as well. Let's wait till Q1, Q2 before we put this on our big stocks to watch and stocks to buy list here. Let's go. We did Robinhood. When we look at Robinhood, again, so Robinhood, obviously the Bitcoin play is a fear there. There's also, they're now getting into that space of the prop betting and stuff like that. I don't know how that's going to affect them. I honestly expect them to beat earnings. They report earnings on Tuesday this week. And so I anticipate Robinhood to more than likely beat earnings. The only gap I see on this chart is right here, which is at $50. So it's a $30 fall from where we are. I love it at 50. I think it goes back to the 150-ish realm. But there are individuals that are leaving Robinhood to go to, I'm going to say something not so nice, but better brokers like Tasty Trade, TD Ameritrade, Thinkorswim, Charles Schwab, which owns Thinkorswim, right? Those companies, they're graduating from these Robinhood accounts to the bigger and better markets. Now, Robinhood has a stated goal of being all things to all things investing and banking. We'll see if that actually happens or not, right? Time will tell. Personally, I wouldn't be in Robinhood right now. I'm not in it. I'm not looking for a buy on it. Do I think that it's going to pop from earnings? More than likely. I do. So if you're in it, look for that, and then look for you to maybe unwind a little bit. AVGO. We have AVGO here. So again, my target is this gap right in here at 254. It's not changing. I think, again, circular financing, the AI boom, it's not really a bubble. But what's funny is no one can say they're in a bubble until after the bubble popped, right? .com bubble, didn't realize it was a bubble until after it popped. Housing bubble, didn't realize it was a bubble till the bubble popped. Well, there was two people that realized that it was a bubble, and they won a Nobel Prize, and they wrote a book about it 2 years prior to the bubble popping, and people laughed them out of the room. Let's go BE. Good old Bloom Energy. Good beat on earnings. I think, look, energy is one of those things that I am very much into as far as investing in for the long term, because there are so many energy plays. There are so many things that we need to do with energy. There are so many individual opportunities around new energy and new energy sources, like it's 4 U's, whatever the 4U energy fuels. Right. I hate that it's you, but whatever. Right. I think Energy Fuels is a great company to potentially look to be in. Very little gaps in the chart. You set a new high before the big pullback here. You have, if we go from this recent low to this recent high, you have a 5-0 pullback looking to go up to 37.68 is where I anticipate this to go to. They are making headway. They are a miner for specific type of
uranium, and other alternative fuels that we need in the US to run this AI infrastructure. The other stock that I called out a while ago, which was Corning, right? We talked about this stock a long time ago. It's now at 122. Okay. 122. They make, not only do they make the glass for Apple, but they also make fiber optic cable. They're the largest producer and supplier of fiber optic cable. Fiber optic cable is a must for AI data centers, right? So they're just going to continue to boom. Wait for the pullback though. Okay. I'm not getting into this one. I'm waiting until this thing hits somewhere in this like 96 realm is where I'm looking for. $96 is where I'm looking for on Corning. Google, we talked about APLD. This is an iffy trend. I think that this could push higher to like 39 before a big fall, to be honest with you. Um, Push higher to 39 before a fall down into the 18 realm. Um, Again, it's just from a technical perspective, this isn't a beautiful chart to say the least. Let's go. We did NVIDIA. All right, let's go into pound yen. So pound yen, in looking at it, again, yen weakness is still showing here. We still are in the buy zone, still got buying opportunity. We don't have a red dot yet to show opportunity there to the south. So continue for yen weakness on that. And CAD Swiss, CAD Swiss, we do have a great level of support at 56 that we bounced off of, but sellers are still in control here. And if price of oil stays low, look for the CAD to continue to get weaker. That's it. It is not, Priyanka. It's not. APLD. Like from a technical standpoint, what I see here is a left tip, center tip, a right tip that broke all this uptrend that we were in. And then if this pushes up, like I said, to 38, I would not be surprised. And then I'd be looking for the fall down to 18. Okay. And let's go into LRCX. This again, we have a red dot that appeared, but we were in the buy zone. We have selling energy kind of in control, but the market are falling out of favor. So this is a potential buy. Potential buy, but some big gaps here as well. Down in here, 175.34 fills all of our gaps, but what do they do? Chip making tools. Okay. Look, I love them. A great pass through economy. Is there concern? Absolutely. Absolutely. Because it's going to fall if chip manufacturing falls, right? That's the deal. They will fall in line with the Nvidias and everything else around AI chip manufacturing as well. Look, dividend stocks is where you may want to place some bets, so some investments, stuff like Walmart, right? Great company to be in a quote unquote recession, whether you believe it that we're in one or not. Doesn't matter to me what you believe. As long as you understand that Walmart is presenting a phenomenal opportunity, and Target as well. And then some of these like stocks like MSTY, right? Like MSTY. This is MicroStrategy. It's $24 a share. It's down pretty down, and it plays a weekly 30-cent dividend. Right? Weekly, 30 cents per share that you're getting paid out on just to hold the stock, right? Netflix has one as well. NFL I think it is. Is the dividend one? Or is it W? Yep, this is a weekly pay ETF. NFLW pays 13.9 cents per share, and it's $22 a share right now. And they have a gap up here at 41. Right? So this is a absolute no-brainer of an opportunity here. And it moves based on Netflix itself. Right? So if Netflix starts to look strong, if Netflix shows some signs of growth, like, I don't know, maybe if they had good earnings and they beat both on the top and bottom line, revenue and earnings per share, maybe there'd be something good around that. Who'd have thunk it? Maybe from a technical standpoint, if they kind of fell to a major level of support and bounced off that level of support, maybe that would be pretty good too. Or, they could fall another 10, 12 bucks down to fill this last gap at $70 a share before they rally. Who knows? But it would also look kind of good if, buying energy was in there, right? Buying energy was starting to take over. You can wait for a blue dot on this. You can wait for a cross on this, but honestly, $82, I think Netflix is a home run of an opportunity, especially if it hits back up to 123. Okay? Especially if it gets up to 123. Palantir, ELTR. Palantir, guys, I think this is interesting. Again, this is like beat on the top and bottom. They have one of the largest government contracts that they got. They're building social profiles on all of us. It's owned by Peter Thiel. It's supported by the government. They already are getting paid. Look, it's kind of got caught up in the AI tech and Bitcoin drop. But the gap on this chart, the only gap on this chart is around 96.48. And there is that's the only gap to the south. The one to the north is at 201.82. So about what? 35 plus 4, $39 to the south, and about 70 some dollars to the north. In plotting fibs, we're down there to 110. Let me add on. I just want to see this. Add on a 200 period moving average here. Make it purple and make sure it's thick. So we are below the 200 period moving average, which is quite interesting. And it went, the last time it even touched the 200 period moving average was 631 days ago, or 432 trading days it took to just get to the moving average, the 200 period moving average. So it's been about 2 years above the moving average, the 200 period moving average. So it broke it. I anticipate maybe we see 110, maybe we fill this gap. Once we have a blue line and buying energy back into it, buy again. If you're in it, hold it. just hold through the pain. Don't go adding on to your position every single time it makes a new low or anything like that. Just hold it. And once you start to see it gain like 3 to 5% every day for a number of days, then add to the position, right? I add to my positions that are winning, and I cut from my losses. So I would rather the stock be headed this way and me add money like here, 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 and here, than for the stock to be headed this way and me add money here, 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 and here. Right? Because this way, at least I know I'm making instant return. I'm not throwing good money after bad. Whereas the other way, I'm wasting good money going after bad, if that makes sense. So let's see. Yeah, Ron, they are. I think that's I hate to say this, I think that's a play around, the Larry Ellison pull, because Larry Ellison and his family own Paramount Networks. They just lost Taylor Sheridan to NBC. So they were hoping that this Warner Brothers deal would be good for them. But they are saying, they brought it to the attention that, oh, if Netflix owned this, then that's going to create a potential monopoly on entertainment. But there's Disney, there's Netflix, there's Paramount, there's Amazon, there's all these different companies out there. So really, would it? I doubt it, right? It's going to be hard to pass that antitrust stuff. Hard to sell that antitrust stuff, but we'll see. We will see. Let's see. Now with that, guys, I do apologize for all the internet issues today. I will try to get this recording up and to you. I'll leave you guys to it. I know some of you are itching to go watch the foosball, as they say, as they said on the movie The Waterboy. But I thank all of you for being here today. We will have our Sunday session next Sunday, which will be February 15th. So I gave you Valentine's Day off. You don't got to spend it with me. But we'll see you guys February 15th. I appreciate you all. And you guys have a good one. And I wish you guys health, happiness, and success at trading. See you guys in a webinar very, very soon. Thank you so much.